Morning, everybody. How are we again? Morning, Forex Fire. Harold, Danny, Yusuf, Bill, Evil. How we doing? So, back in another one. Today, we're covering what a candlestick is, telling you, and the only three possible outcomes. So, part of today is about looking at reading price action. Morning, Vitali. Thanks for the tip on the US dollar CAD. Nearly missed that one. So basically, today is about looking at candlestick patterns, candlesticks individually, and reading what the individual candlesticks are telling you. Yeah. So morning, Linus. So yesterday we looked at understanding how and why the market works. Today we're looking at what the candlesticks are telling you about what the banks and institutions are doing over this particular period that you're looking at. So this here is a daily chart, but all charts have the same thing on them, candlesticks, and all candlesticks are is a representation of price over time, and reading them is very, very simple. Yeah, so we're going to cover that today. So if you're watching this on replay as usual, use the comment section down below if you've got any questions, and obviously I can answer those in the comment section or ask in the Discord if you've got any questions about anything that we cover in these. And then tomorrow we're going to look at main candlestick patterns for reversals and also identifying levels to take price action trades at, and also targets to exit price action trades. But these 4 sessions today and the next 3 days are all kind of interlinked. They're all part of the same thing, which is price action trading. So we'll kick off with this one and look at what the candlesticks are telling you. But this is basically reading what is happening right now in the market. And you can use it on any time frame. So predominantly, the reason I wanted to cover this is because candlesticks make up candlestick patterns. Candlestick patterns are signals. So signals is how we get into the market. So you've got to understand what is happening within a candlestick to understand what is happening right now in the market and which way potentially the market is going to go next. Most scalpers in futures and any market really that trade low time frames are pure price action traders. They do not use indicators, and price action is king at the end of the day. So whenever you look at any chart, yeah, so if we move up to a daily, because we've got lots of indicators, yeah, every indicator you see on this chart is lagging price. So the RSI is telling you the relative strength over X periods. This is the RSI 14. So over the last 14 periods, it's been going up. I can tell that because price has done that. Yeah, the moving averages here are pointing down and the price is below them because price has been going down. I can see that because price has been going down. These propulsion candles, gaps are being painted on the chart because price has pushed down hard. I can see that on the chart. Yeah, so every indicator you use lags price to some degree, some worse than others. Moving averages, the worst of the whole bunch. Yeah, this one is the 200 moving average on the daily chart. It's telling me what the average price has been over the last 200 days. I can see it. Yeah, it doesn't help in any way, shape or form. Some indicators are better than others. Some indicators are giving you potential levels to look at, ADR for example. But when we hit the average daily range, we know it's been pushing because we can see it in the candlesticks. The candlesticks tell you right now what is happening with price. So they are a much less lagging indicator than anything else you will ever find. They are also just an indicator. Yeah. So this time frame we're looking at right now, this candlestick here is an indication of price over time. So it's an indicator that shows me that the price opened there, it pushed up and it pushed down a little bit further, and then it pushed up a little bit and closed. Yeah, so that is what it's indicating to me, that there are more sellers in the market than there are buyers. But the key thing is the wicks. The wicks are telling you much more of a story. So we're going to look at each type of candlestick there is, and there are only three, or three. We're going to categorize candlesticks into three main categories, basically. So the three things that a candlestick is telling you, okay? But you have to understand that what you're looking at on the chart is also a lagging indicator, yeah? So, you know, you'll hear it everywhere. Price action is king. You use indicators. I use pure price action, naked charts. I'm much better because of it. What they're telling you is that they are basically using a very short-term indicator to make decisions rather than longer-term ones. So there is less chop in price action and reading price action than there is with any other strategy that you use. So we'll look at various candlesticks, and as I said, it doesn't matter which of these time frame buttons at the top I click. Yeah, you can see up in the top left hand corner which time frame we're on, and you can kind of guess from the lines on the chart and the axes and the spread, obviously, which time frames I'm roughly going to be on. But you'll see that it doesn't matter. Yeah, price, the indicator that we're looking at is doing the same thing every time. Yeah, so the best thing to start with, I think, is the three possible outcomes of a candlestick. Okay, and the way that most price action traders, and me included, use candlesticks is to get confirmation of what I think may happen. Yeah, so there are only three things that could happen. The price is either going to be going up because the bulls are in control. There have been more buyers over this period of time than there have been sellers. So we have a candlestick that has a body, which is a color, that one, green, yeah, buyers. So there were, this is where the candle opened. Obviously we know, I'm not going to teach you to suck eggs, but I'll go through it anyway. OHLC, open, high, low, close, open, there isn't one there, open, high, low, close. Yeah, so the open to close is the body, which is the candlestick. Yeah, so if it's bullish, it's green. In this case, you can have whatever color you like, but it shows you that there were more buyers in the market over that period of time than there were sellers. Obviously, the reverse is true. Yeah, if it opens there and it closes lower than it opens, it means there were more bears in that particular period of time. Think about what we covered yesterday in bank orders. If there's 25 million orders over this period of time for shorts, and there are 20 million orders over this period of time for longs, the candlestick will be shorter, will be pointing down, and it will be a red color, because if all of these transactions happen over that period of time, there are 5 million more shorts. Therefore, the candle will not be able to close at a price which is higher than the open, because there's more volume to the downside. Yeah, so you've got bull candles and you've got bear candles. You've also got indecision candles. So these are the three types. It's bullish, it's bearish, or it's an indecision. Yeah. And an indecision candle is neither bullish or bearish. Now, the typical indecision candles that people will look at will be spinning tops and dojis. So we got both on here. There's a doji. Just about see them down there. So it's a big long wick with basically a line, yeah, which means that we opened and we either pushed up or we pushed down, but we came back to exactly the same price. So over this period of time, in which happens to be an hour, that price opened there. The bulls tried to go long, they failed. The bears tried to go short, they failed, and we came back to the middle, which is equilibrium. Think about what we covered yesterday. Yeah. Volume of orders. What's a bank's or an institution's job? To get the orders filled that they have on their books and on their desk. Yeah. So if, as a bank, you can basically get all of your orders filled in 1 hour by going long, finding sellers, and then going short, finding buyers, and coming back to where you started, job done. Beautiful. But it means that there is no bias. Yeah. So that is an indecision candle. It's not telling you any information apart from the market didn't move. However, it is telling you a little bit of information with wicks, which we'll go into in a second. You've also then got spinning tops, which is basically a little bit of body, but a very lot of wick. Yeah, these are indecision candles because, yes, there were a little bit more sellers than buyers, but you can see by the wicks there was a lot of attempts to go long, a lot of attempts to go short, but at the end of the day, we didn't end up going anywhere. So they're also indecision candles. We have another type of indecision candle, which is an inside or an outside bar. So when you have a high and a low, and it doesn't matter what the body is, it could be that big, it could be that big, it could be the whole candle, yeah, but a high and a low. If the candle that comes after that is inside, the high of the low is inside of the previous candle, so there, this one, yeah, that is an indecision candle. Now this happens to also be a spinning top. Let me find a better example. Scrap that. This one. Yep. This candle here is bearish. However, it's inside the previous candle, meaning that when that candle closed and when this candle opened, we pushed down, but we didn't manage to make any progress. This is an indecision candle as well. And then you have an outside bar indecision candle, which I'm going to need to find because they are more rare. There we go. Oh, stop jumping around. Where did my outside bar go? There. Yeah. So this is an outside bar. So we had a candlestick there. Yeah. Where we pushed up and down and finished in the middle. And then the next candle opened, we pushed all the way down. Yeah. The sellers tried to take control but couldn't. We pushed up, and then we pushed all the way up. And then the buyers tried to take control, but they didn't. But they did end up being bullish. So this is kind of a bullish indecision candle in the fact that there was a massive amount of attempts to go short. There's a massive amount of attempts to go long, but we didn't really finish anywhere. We had a big wick at the top and a big wick at the bottom. Just trying to find another example which is slightly better. They are more rare, outside bars, because it's expansion, price expansion, which is more difficult. There we go. That's actually a better example. It's very marginal, but it's better. So there's the high of that candle there, this red one. Yeah, and the low. There's the high of that preceding candle and the low. So it's an outside bar. So we pushed down outside of that low, weren't able to go short. We pushed up above that high, weren't able to go long, but we closed back inside the previous range. And this is the most important part of the inside of the outside bar indecision candle, is we tried to go both ways, but we ended up back where we started within that previous range. So again, that is indecision. Yeah. So those are your three outcomes. It is either bullish, bearish, or neither. And neither can be that, it can be that, or it can be that. But it means there is no directional bias. Yeah, because we didn't break above or below and close above or below the previous candle's high. If this one here had closed like that above there, it wouldn't really be an indecision candle, because it means the bulls actually managed to break the high last time and make progress. Yeah, it's all about making progress. Price action is trying to make progress. Here's an outside bar, which would be an indecision candle, but this one is actually massively bearish because that's the low and we broke all the way down there. So that's kind of an outside bar indecision usually, but a massive candle will tell you obviously it's going short. I mean, it's obvious that's probably a news event, I would imagine, or the open. That's probably 10 a.m. 9 a.m. So it's probably the open of the market. So those are your candlestick types. So there are only three. So when you're reading price action, what you're looking for is what has happened in the last X number of minutes, days, weeks, whatever it is you're looking at on a candlestick, and what is price telling me. So the typical way that we categorize price action is by candlestick patterns, which is what we're going to cover more tomorrow, which is basically things like bearish engulfings. So people will look at that and say, oh, that's a bearish engulfing, I need to go short. I will look at that and go, that is an inside bar. I need to wait, because the bears didn't manage to get even to test where they tried to get to and got beaten back from last time. They tried again and didn't even get there. Yeah. So at the moment, the bulls couldn't make any progress. The bears couldn't make any progress. Yes, for an hour they made a little bit of movement, but until that bar is broken, that previous candlestick, there's no decision to make. We wait. Yeah. So when you're reading price action, probably the most important thing is you need 2 candlesticks to make a decision. Yeah. So a single candlestick can be used, but you're better off waiting for confirmation that what the first candlestick is telling you is actually true. Yeah. And this is where most people go wrong when they try to read price action. So they will see a whacking great shooting star candlestick where the bulls have pushed up really far. They've completely failed and been overwhelmed by the sellers. We end with a whacking great red head on the bottom of our shooting star, and they go, I'm going short. No, what you should be doing is going, excellent. Looks like we've got a setup forming. So at the moment, this is what? Potential exhaustion, because we've got a long wick. And the wicks are what tell you what price is doing. Yeah. So the buyers have here tried to go long and failed and been completely overrun by the sellers. So this is current price action here. So what this candlestick here, for example, is telling me is, yeah, we tried to go higher. We've got a higher high and a higher low, but we didn't manage to go any higher. Now the bears have taken control, but what I need to now do is wait and see if we put in a lower high and a lower low, i.e. the bears continue this move, which means the bulls have run out of steam. That's a short. 2 candlesticks telling me the same thing. The bears are in control. The bears are in control. So when you see your shooting star, you wait. Yeah, there's all these indicators out there that signal you to these types of things. Candlestick pattern recognition. I've got my price action toolkit does price action recognition. But what you need to do is ideally wait for the next candle. So this candle here has closed here, yeah, after failing there. Now the next price action could be that the bears continue to make progress, but they fail and actually end up with a bull candle like that. So that is telling me that yes, we're looking like we're exhausted, but the bears cannot continue. The bulls are back in control. So what I would now do is wait. And you can use the high of that wick and the low of that wick to then place a trade to break out of that price action. So we now know that, yeah, there's not many buyers. We know there are more sellers, but there are still some buyers in there. There's not enough sellers to continue a move. So we've now got a 2-bar pattern that allows us to take a trade. Yeah. So that's one example of a trade that you can take from reading price action. But one of the most important things with price action is the wicks. Yeah. So when you see a big long wick to the upside, it means that there was a defeat, yeah, by, in this case, the buyers. There was also another defeat by the buyers and another defeat by the buyers. Yeah. But what happened here is no selling price action. Yeah. The buyers couldn't get any further. However, we've got a higher high and a higher high, yeah, after this candle, meaning that there are no sellers because we're making new highs, which means that the buyers are actually very, very, very strong. And then look what happens in the next candlestick. We break out. Why? Because the buying pressure is moving up. And again, price action and candlestick patterns. What I've just drawn there is what? An ascending wedge. An ascending wedge is a bullish breakout pattern. Yeah, and that's exactly what happened. So if you're trading this on low time frames, you'll be seeing an ascending wedge formation. Yeah, and you would have gone in on 5 minutes and taken whatever profit out of that. Yeah, so the wicks are very, very important because the wicks are showing you exhaustion, but they do not mean that the buyers cannot get further. They are telling you that they are finding it hard, but not impossible. We then got an outside bar that broke bullish, which is indecision. No decision to make there. Yeah. So because we broke down, there's a hell of a lot of sellers in the market. Because we broke up, there's a hell of a lot of buyers in the market. We broke out of that. But again, it's not telling me really who's in control because we know there's a lot of sellers. Yes, the buyers won the end of that hour, but then look what happened. The sellers took control and created what? Pretty much an inside bar. Indecision. Yeah. Again, but there were more sellers there. So again, I'm waiting to see what happens. Nothing at the moment. Then we get a lower high and a lower low put in, but a tiny little wick. Yeah, indecision. No buyers, no sellers. There's no pressure. There's no reason to jump in any direction, because at the moment nobody's winning any battles. Yeah, the battle was definitely won there, wasn't it? Yeah, and there's multiple price action clues here as to why that battle was won. Yeah, so we tried to push up long, so we knew that the buyers were in control. Yeah, and then the sellers tried to take control of the market. They pushed out of that low, but the buyers pushed them back. The next candle, the sellers tried to push down, couldn't get to that low, and then the buyers tried to break out, but also couldn't. That breakout candle tells you that the battle over those 3 hours was won by the buyers. Now we can go long, because we know who's in control of the market. Yeah, definitely the buyers, isn't it? So, but the first clue you get is the wicks. There's a guy on YouTube, isn't there, called Wicks Don't Lie. Yeah, and his whole premise is price action trading. Yeah, and the guy owns a brokerage, but that's really what he's trying to do, isn't it? But anyway, we're not here to talk about that. The wicks are the very, very most important part of a candlestick, because they are telling the story about the battle, not about the outcome. We know the outcome of the battle. The outcome of the battle here was bulls. The outcome of the battle here was bears. But the actual battle is happening in these wicks. Yeah, so the wicks are very, very important. This whole area here is telling you that there is massive buying pressure, because the sellers are trying really hard to go short. There's 25 million short orders every candlestick here. I'm just picking numbers at random, but you get the point. There's a load of sellers here, but there's 50 million long every time here. You're not coming through. We can't execute this whole 50 million at the moment, because there's only 25 million of you wanting to take our orders. So we'll spread it over this candle, this candle, this candle, and this candle. You can have a bit of it every time. We're holding up the order, holding up the price, propping up price. If you look at this in the futures market, they will call this an iceberg. Yeah, but the wicks tell you the iceberg is there, so you buy the lows. So one good strategy, which a lot of traders use in scalping, is what they call a wick test. So this is a perfect example. I couldn't have picked a better day than yesterday on euro pound. Yeah, price pushes down, they're unable to move further. Price pushes up, meaning there's more buyers in control. Price pushes down, you buy it. Why? Because the sellers failed to go short, the buyers took control of the market. Bullish engulfing, and they made a new high. So if we test this area again, or in fact this area, you could have bought that or that. That is your trade on the wicks. So the wicks is where you take the trades. So price action trading is all about identifying wick structures. But the candlestick patterns, the candlesticks bodies, is what most traders concentrate on, which isn't necessarily the thing that you should be always looking at. If you've got something like this going on in the market, yeah, you can use also candlesticks to tell you when to get out. So price action is an indication of price action over time. So are bulls or bears in control over a period of time? If you've taken a breakout, for example, as a short here, yeah, the trade is underway. The price action will tell you when to exit your position. So typically people tend to look at market structure very simply on a candle by candle basis. You've got a high there, a low there, a lower high and a lower low. Bears are in control. If you've got a lower high and a lower low, the bears are winning. You've got a lower high and a higher low there. Inside bar, indecision, which means that the bears are either one of two things: running out of steam, or we've got some buyers entering the market which are new and the bears are struggling to overwhelm them. So that candlestick is your warning. Yeah, so there's a warning sign. That's a red flashing light, by the way. Could be a bullet. But that's basically telling you, watch out, because this sell order that you've got in and you're riding the wave of is struggling. So this point here, when you're a price action trader, you're looking at, okay, I don't need to do anything now. Why? Because it's an indecision candle. But what I should probably do is maybe protect the trade. So if I'm short and I've got a load of profit, I'm either going to protect it or maybe take some off if you want to take a portion of the trade, or lock some in. And a good place to lock in would be above that high. Because if we're going to continue with bearish action, what we're going to do? Put in a new lower high and a lower low. So if the move's going to continue, we shouldn't break that high. We may temporarily do it, and if we do, it means that there's a hell of a lot more bulls coming in, which is what this wick was telling us. Yeah. So the next candle, we push down, lower low, lower high. So we continue in our short. Here we get another test of the wick and the bulls enter the market. Now this one is basically telling us that this could be an exhaustion because we've got two big long wicks. So the sellers have tried to go down, failed. The sellers have tried to go down, failed. And also the bulls have taken back a little bit of what we had last time. Next candlestick is a higher high and a higher low, which means that the bulls are starting to take control of the market. That is where I would have exited that short if I was in it. And if I was trading price action. Yeah. And this is happening over X. And this is the beauty of price action and reading price action and learning to read price action. This could be a 1 minute chart. It could be an hourly chart. It could be a daily chart. It could be a 5 minute chart. It can be whatever you want it to be. Price action is the battle between buyers and sellers over a period that you select and you define. It is the same on every single chart that you look at, on every single instrument that you look at. It doesn't matter if this is Forex, it doesn't matter if it's crypto, it doesn't matter if it's indices, it doesn't matter what it is. It's anything. It's basically a marketplace, buyers and sellers fighting over whether or not they can make ground. They can get further. They can make profit. And the person you want to be on side with is the person making profit. Covered yesterday. Which bank today, this is the open, which bank today has got the largest volume of orders? Yeah, that is what price is going to do. It has nothing to do with yesterday. It has nothing to do with this candlestick. Every candlestick is telling you who is now taking control of the market. And the probabilities of the market continuing in the way that it has gone, and this is where the follow the trend saying comes from, is higher than the probability of it reversing. Because if you see the same thing happening again, bulls taking control of the market, and that's not a good example, but there's two candles there where the bulls did, it's more likely that they're going to continue. And that's what the idea behind the SIH and the opening range breakout strategy is. If we break short, and the reason we've broken short is because the volume of orders is higher than the volume of long orders, i.e. we're breaking short because there's more sellers than buyers, we go with the sellers. If it breaks long, we go with the buyers. What happened yesterday, and everybody asked me in the live rooms, don't they, what's your thoughts on the DAX, or what's your thoughts on the S&P 500? I don't know. It hasn't opened yet. It opens this afternoon. What happened yesterday doesn't matter, does it? What's going to happen this afternoon is down to the volume of stock orders they have on their desks today. That's got nothing to do with anything. The strategy that Alexander posted in the live room, yeah, that buy on a Monday if it's down and sell it on Tuesday or Wednesday, and vice versa, sell it on a Monday if it's up. Yeah, that strategy is relying on a fact that yesterday's price action has an impact on today's. Yeah, sometimes that can be true. Yeah, and the reason that strategy specifically can work is because on the Monday you have Sunday and Saturday's fundamentals impacting price. So the price action on the Monday is basically 3 days worth of stuff, world events. Yeah, but if you look at a daily chart, all we're doing with that particular strategy is reading price action. So this is Monday, this is yesterday on the DAX. Yesterday on the DAX was a higher high and a higher low. Yeah. So the price action that day was more bullish in the fact that we tried to make more progress, but it was bearish in the fact that we couldn't actually make that progress. But the sellers won at the end of the day, but they didn't win at the end of the day. Yeah. That body there, you get gaps in stocks. Reading in stocks is a little bit different because you get gaps as well, which throws price action a little bit more into chaos. But this here is telling me that, yes, it's ever so slightly bullish, but it's not. We've got an inside bar. We've got a bar closing inside the previous bar, showing me that, yes, the bulls tried to take control and the bears also tried to take control, but nobody won yesterday. So that theory of if we get a down day on a Monday, buy it. Actually, yesterday, it's very indecision. Nobody won, nobody lost, did they, yesterday? So should you really be buying it? You're hoping, basically. But the thing is, with strategy development, as we've looked at, if you can find an edge that plays out over a long period of time, it's there. However, some edges have an advantage, as we looked at, where the equity curve is, the profit figure looks great, but you look at the equity curve and it's like, that's lucky. Yeah. So it might be one of those strategies, but again, we can test this, can't we? So going back to price action. So that is in effect what each candlestick is telling you. And to make a decision, you need a minimum, ideally, of 2 candlesticks. Now, you can be aggressive and you can take a single candlestick, but obviously confirmation has an advantage in the fact that what you thought was going to happen is happening. Confirmation has a disadvantage in the fact that what you thought was happening has happened. Yeah. And you're hoping it continues. So again, even with price action, like I say, it is a lagging indicator. So here, reading the price action on the chart right now, we've got 30 minutes left on this candle because it's hourly. So I'm looking at the euro pound today, and I'm looking at roughly when the market opened. We rallied hard. Yeah. And then we had a good attempt at yesterday's high, but we didn't get through it. So what is this telling me? There was probably orders at yesterday's high where they sold the market. We know they did because that's what the price action from yesterday told us. We got there, we tried to push through it, and we failed. So that is my initial, okay, yesterday's high looks like it's failing, but I need confirmation of that. This candlestick here pushed up and then it pushed all the way down. Now, at that particular point in time, what I saw here at whatever time it was, I saw that. I saw a rejection wick followed by a rejection wick, but this candle had not closed. So again, price action is telling you what is unfolding, and the story of the sellers unable to get above yesterday's high. The buyers unable to get above yesterday's high because there's too many sellers in the market. And then the buyers having another go and also getting beaten back again. Think of this like a battle line. There's an army standing here with submachine guns. There's a load of blokes running at them with swords. They're not going to win. Yeah, that's what price action is telling you. And price action as it's unfolded is also very important because you can get in on more aggressive entries into trades that may well work out to be very big. But again, price action tells you as it's unfolding what the story of the trade that you're taking or you're currently in is potentially going to be. So let's take a theoretical that we go short here because we saw that wick forming and then we came back down here again. It's a very simple entry. We go short and we go, right, we've come down below the close of the last hour and we're going to enter short. We'll put a stop loss up there because if this is not going to work out, we want to get out. And we will then see how this hour goes. Now, this hour closed with a higher low, but it closed bearish. So it's an inside bar on the body of the candle with a higher low. We also made a higher high, which is bullish. So it's a good trade because we're in profit, but it's not a great trade because the guys who are on our side didn't win. So we'll see what happens next. The next candlestick is unfolding now. We've tried to go short. We failed. So we're getting pushed back, but we're also now fighting back. Excuse me. This candlestick hasn't finished. So if we're in this trade short with this stop up here, we sit, we wait because we've got indecision at the moment, haven't we? There's no winners, no losers. We have somebody that is doing better, the bulls, because we've got higher high and a higher low. Yeah. But there's no winner at the moment. Yeah. Think of price action like a constant channel of movement. You've got highs and lows on candlesticks. If the lows are going down and the highs are going down, you've got a down channel. If the highs are going up and the lows are going up, you've got an up channel. If the highs and lows are roughly in the same spot, you've got a range. It just gives you the direction to trade in. You could use, in theory, to read price action, a 1 period moving average, and the slope of the 1 period moving average tells you what happened in the last candlestick a lot of the time. Yeah, so it can remove the fact that you need to understand and read price action. But one of the main advantages of price action is telling you when to get out of trades as well. So again, we're going to look at targets for exiting price action trades and why they work on Friday, or whenever we get around to that session in the next few days. And it's very much along the same sorts of lines. Is price telling you that you should be getting out? There's a warning sign. But until we break this low, it's just a warning sign. And there we've put a propulsion gap in, haven't we? Which is saying there's a hell of a lot of buyers here. We know that. We've just seen it. We've read the price action. We don't need the blue thing on the chart to tell us that the buyers are in control, do we? Yeah. So right now on this one, looks like a great short for me. Yeah. But I would want price to close down below this area. And one of the other things about price action is the candle close is the full story, but the full story has been read. Yeah. The next story starts when the next candle starts, and it's a totally different story to the one before. But stories tend to repeat themselves, and this is what price action reading is. It's just reading what has happened each period and making a judgment call. Now, when you press the button, whether you wait for a partial candlestick, which looks like something may happen, or you wait for that candlestick to close and then press the button, is entirely up to you. But the odds are always going to be the same on the next candlestick, because in this hour, someone else comes along with 500 million orders long on this because they've just received it onto their desk. They will not let the low get broken, because they will add everybody that's selling. They will take every order going until they've exhausted that 500 million. And if that 500 million gets exhausted, yes, we will continue to win. But every candlestick is new. This is the lagging indicator from the last hour. This is the lagging indicator from the last day. The last day's price action gives you a clue as to what is currently happening in this market. Nothing. We wait. Today's price action is telling us that the same story as yesterday, we couldn't really get anywhere. So we'll see what happens. And if this closes like this today, we wait. There is indecision in the market. There's nothing to do because it's not going anywhere. It's not telling us anything. However, this day told us to go long because we broke out of that candlestick, which was an inside bar. We had an indecision candlestick followed by an indecision candlestick, which you probably heard me talk about before, which is a 2 inside bar pattern, which is a contraction in price. Indecision contraction usually leads to somebody walking along with a whacking great order and making it go somewhere. A la that. So you can go long there, and you know that if you are going to hold the price action from this day, and it's going to continue because there is a reason banks and institutions did this, and there is a reason for them to continue to do it, they will not go below that level because they will keep adding more to this day's worth of orders. But the price action every day will tell you what is happening next. And after this, there was no more buying. There is no more buying. So far today, there's no more buying. Yes, there's buying happening, but there's also selling happening, because if there wasn't selling happening, this would be going up there. Yeah. Does that all make sense? Hopefully that explains the concept of what is going on within inside a candlestick, which is what I wanted to get across. So this is something that basically you can use on any time frame. Yeah. And specifically for breakout trading and for exit strategies, this is incredibly useful. So whenever you get into a trade, and one of the things people struggle with all the time is exiting trades. So when you get into a trade, you set yourself a target. So this short, I've set myself a target down here. In fact, I need to move this. Actually, no, it's on the hourly. Yeah, so that's where I want to target, down here. It's a propulsion candle. Yeah, so look at this price action now. A great example, isn't it? We were looking at it in the live room. Yeah, so we looked at this as limit orders triggering at the monthly high. The price action confirmed it. So I was like, I'm in, because my idea was this. My confirmation is this. So price action is a signal indicator to you that the condition you are expecting to happen has happened. The confirmation for me is now underway this hour in the fact that we've pushed up again and it's confirmed that this level is holding. So I am short. We've also managed to push down lower than the previous low, which means that the sellers here actually had more firepower. The buyers have tried to push back and the sellers have overwhelmed them so far. So right now we have a bearish reversal underway, but it's not confirmed because we have still got a bull candle there, a huge amount of buyers in the market. But the wicks are telling us that they aren't able to get through. The wicks are incredibly important. When you see this happening, 3 wicks in a row, and again, these are strategies, these are that play out all the time, the 4 wicks in a row. Yeah, if you find an area of price action which just contains wicks over and over and over again, it's telling you that the buyers are not able to penetrate that price point. Therefore, the sellers have got more chance, an edge, of overwhelming those buyers. But we've got a propulsion gap, which is a large order being placed in the market. Remember, we can't execute our bank orders in one go because we need somebody to take the other side of the orders. I've got 100 million to go long with. You've taken 25 million of it, which has made me do this. Okay, I've still got 75 million. You come back down, I take another 25 million of it. You come back down, I take another 25 million of it. You don't come back down to the price I want, but you do there, so I take the other 25 million of it. There's my 100,000 order gone. Okay, more orders come in, but look at what happened up here. This is where the sellers were. They couldn't get through there because this order wasn't big enough to penetrate that level. So this is telling you that these guys aren't winning, but neither are these guys. Indecision. Look at all the indecision here. Yeah, indecision candle. That one was probably more bearish, but big wick. Indecision. 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 Nobody's winning, are they? Nobody's winning. Now we're winning. Indecision, but bullish. Yeah, so the bulls are winning. Look at the wick, the buying out of the propulsion. Yeah, so it's entirely up to you whether you choose to read price action. And I read, and this is the discretionary part of trading. Each candlestick has a definite thing it's telling you. It's either there's no discretionary element to price action in respect of highs and lows. Yeah, if price goes there and it doesn't get any higher, if it goes down there and it does get lower, there is no argument that is bearish. If you make a lower high and a lower low, the bears have not only stopped you getting up there, but they've also driven price further down. You lost. That is bearish. There's no argument. There's no one on the planet that reads price action that will tell you that a lower low and a lower high is bullish. Yeah, it's bearish, and the vice versa for the bullish. But the indecision is where the discretion comes in, because indecision, that candle there, some people will go, that's really bullish. Others will go, that isn't anything. That's just basically the remainder of that hour's price action playing out, but no one's in control. No one's in control. Now the bears have taken control because there's an outside bar formed, which is an indecision candle, but with a whacking great bear bias. Get in. There's a candlestick pattern there, which I'm going to cover tomorrow, which is my favorite candlestick pattern. And it's a 3-bar reversal. Yeah. Bulls run out of steam. Bears take control. Yeah. But it's it's reading price action, but it's not using one candle. And that's the key takeaway. Price action is not one candle. Price action is one candle with a second candle confirming the first. Yeah, if you see that candlestick form and then the next candle opens here, or rather opens here, it pushes down a little bit, then it pushes all the way up there, and then you see it pushing down to here again. Yeah, You don't need to wait for this candle to close. That's confirmation. The bears are in control of the market. The bulls are trying to beat them. The bears have said no. Get in. The bears won that round. The bears won that round. They're fighting, they're punching, they're probably going to win the next one. The probabilities go into your favor. However, as I've said many, many times, you can win 2 rounds, you can land 2 punches. But if the guy that comes along for the 3rd punch is 5 times your size, you lose. And this is where risk management comes in. Yeah. But reading price action is all about identifying the story within the candlestick, not the candlestick. The candlestick closes. Everybody can read price action and go, well, that's bearish engulfing. That's a bearish move. Yes, we know it's a bearish move. But as it pushed up to there and it came down to here, you can read that as being bearish as well. You can enter it before the candlestick closes. But yeah, so that's pretty much it. That's all I wanted to cover on reading price action. That, in a nutshell, this 50 minutes or 45 minutes or whatever it's been, is pretty much everything I've ever learned about price action, and everything else I've ever learned about price action I've thrown away, because there is 3 things. It's either bullish, clearly, bearish, clearly, or it's nothing. If it's nothing, you don't do anything. Yeah, even if it looks bearish or looks bullish, don't do anything because it looks like something. Is it or isn't it? You've got to make that decision. You know, these candlesticks here where you get a bearish engulfing, but it is also an outside bar. This particular one, the bears did win that fight, and it was probably the right read on the price action. But because the price action had a bullish element and a bearish element, it's not quite sure. Outside bars are my least favorite pattern. And I don't really like outside bars, because with contraction, you know something's coming. Yeah. So when you look at price action and we look at inside bars, so the 2 inside bar setup is a great pattern, or a single inside bar setup. So if you get a lower high and a higher low than the previous, yeah, there's contraction. So it's definitely no one's winning. You can tell by the body who won the last part of the battle, but who won the first part of it? Yeah, this could have gone down, up, down, up, down, up, down. No one won that. Just because it's red doesn't mean it didn't go up and down 50 times on 5-minute time frame. Yeah, but an outside bar, so we've got contraction. Market won't contract forever before it blows. Yeah, but an outside bar shows you that there's a good chance it might go long and a good chance it might go short. And if it ends within the body of the previous candle, that's a real big flag to me for like, I'll wait. Yeah. Let's practice. Euro US dollar, 15-minute. What's happening now? You tell me. I mean, I'm on the right side of this. So right now, there is a potential reversal happening. So with this, what's going on now, you've got there's more elements to this, obviously. Yeah. So to have a trade, you need a setup. A setup doesn't consist of just pure price action. It consists of levels. And again, we're going to cover levels. We've already covered some levels, haven't we? If I put support, resistance, propulsion on here, what are we looking at? Propulsion gap. Yeah. Propulsion gap is a large order placed into the market. Yeah. There wasn't enough volume for them to complete the order, so they're adding. They're adding. They're adding. Yeah. So the guys that did this are absorbing all of the sell orders that come in, and they keep trying and they keep buying it back. They keep trying and they keep buying it back. They keep trying and they keep buying it back. It's telling me to go long right now, because you've got a long wick followed by a long wick followed by a long wick. Not very much up wick, but a load of down wick. Again, look at the size of the candles. Yeah, if you've got a candle that looks like that, it's obvious there's more buying power. There's more buying pressure. So it's a long. Now, whether you get in on the close of this candle and take a confirmation of this price action candlestick is up to you. You could press the button now. Yeah. And you could choose to put a stop there and assume we're going to go with a higher low, or you could choose to put a stop there and assume that we're going to test this wick again and lose again and put another wick in. Yeah, we've got a higher high, so it's definitely going long at the moment, isn't it? Yeah, out of a propulsion gap where we know that the buyers are. Yeah, all trading is about is trying to get on side with the bank that's in control, or the institution that's in control, or institutions that are in control. Yeah, don't forget there are a massive amount of players in this market. All of them have completely different reasons for wanting something to happen. Some of them couldn't give a monkey's what the price is. They just need to get these bloody orders off their desk. Just get the orders off the desk. There's so much of it. I just want it gone. Doesn't matter what price you get it out. There's others that are, I need to buy it here because this is the price our hedge is at. And if we don't achieve this price, the hedge calculation doesn't work and my corn trades are going to go into negative equity. I have to achieve this price. They will be looking to just continuously buy a level. There are other traders in here who are speculative and they just want nothing but buying or selling because their job is to get in and get out with a profit at some point. There's a million things happening and every single candlestick, the differential of all of those people changes. Each of those banks and institutions has either started, completed, or added, or is in, or is out of something. It's completely liquid, which is why I say the last candlestick has got no bearing on the next one, because in this candlestick right now, HSBC could come in and dump 200 million. Whoom. Oh, that looked really bullish until it wasn't. Yeah, but the odds are in your favor. There's a wacky great buy order and they seem to have added more volume here. They seem to have added more volume here. They seem to have added more volume here. When you choose to buy it is up to you. When this candlestick closes, it's confirmation that this is a buy zone and that we've got a higher high, a higher low, and definitely buyers are in control. So you can choose to close this candlestick in 4 minutes time, or you can just hit the buy button now and get a better price. Or if it comes down to here, a worse price. You'll never know because you don't know what's going to happen next. But all I would say is a closed candlestick is a confirmation. An open candlestick or a candlestick that you are trading that is live can change. So you can look at a candlestick, and you've done this before, right? You look at a chart and you see that and you're like, wow, that's bullish. You take a trade. Yeah. You realize you're trading a 15-minute candlestick and you're only 5 minutes into that candlestick. That candlestick actually ends like that, right? You bought it when the price action within the time period you're monitoring was massively bullish. However, the bears won that hour, that 15-minute, that 5-minute, whatever it was. So I have always been taught to wait for candle close, wait for confirmation, because if you're getting in the middle of a candlestick and you're trying to reprice action, you are basically using a coin flip as to whether or not from the point that you enter until the end of the candlestick, it's done what you want. If it's done what you want, closed and moved on to the next, it's done what you want. However, you're getting in later. There is no right or wrong. You either get in early and chance your luck, or you get in later and get confirmation. If you're good at reading price action, your confirmation will be right more than it will be wrong. But this all takes practice, and it's a really good thing to do. We're going to look at, we're going on again, as we always do, but we're going to look at a way to practice this. And and this is what they do in proper proprietary trading firms and in banks and institutions with new traders. When the new trader comes into an institution, what they do is they sit them down on the ladder. Yeah. And they tell them to read the ladder, read the price action. And what they do is they say, take a trade with a X pip exit in either direction, right? And your job after the session is to come out with a positive outcome, right? So what they're saying is, you can't do it on this. The spread's too wide. Spread's too wide on everything today. No news. It's very liquid market, but it's not a great spread. But so what they would tell you to do is take a long or take a trade, whatever you want to take, right? And your exit is 10 and 10, right? Your job is to get it right more than you get it wrong. Yeah. And there are many professional traders out there and profitable traders, and I know one that scalps 5-minute S&P who is very profitable, and he doesn't use a positive risk reward ratio. He even uses a negative risk reward ratio, because his job is reading price action, and his job of reading price action is determining where it will go based on where it's just been and what he can see, the clues that he can see in the chart. Yeah, you don't need to be right more than 50% of the time if you're using a 1-to-1 ratio, or you do need to be right more than 50% of the time if you're using a 1-to-1 ratio. But if you're using a 1-to-1 ratio, you know roughly, based on what's happening in the market, what the possibilities are. And again, we'll look at exits if you're long. Yeah, what potentially are we expecting to happen here? We're expecting a long wick. We will wait for confirmation of it, but that long wick may well appear at that level. Yeah, so that's an exercise that I wanted everybody to do to help you practice reading price action. If you want to use the price action toolkit, you can use the price action toolkit. Does the price action toolkit work in the strategy tester? I can't remember. It does work in the, but you know, I mean, you don't even need to. I mean, the price action toolkit is for price action trading. Obviously, that's why I built it. But practice it. Go and wait for your. Start off waiting for the candle to close, yeah, and then take a trade, right? And just go for a 1-to-1, and you can choose your discretion as to where you put your stop. So for here, for example, we're expecting a higher low, and we've got a load of bodies there. So it makes sense to maybe stick the stop here. So that is your risk off of that candle, which is a very bullish candle. And your reward would be 1R. Do that 10, 20, 30 times. And obviously the best way to do this, and unfortunately spread is going to kill you in CFD markets on 1-minute time frames, which is why it doesn't work. But try it on 1-minute time frames, because you're going to get a hell of a lot more price action. Literally every minute there's going to be price action, but the price action here is a hell of a lot less reliable than it is on the 1 hour or maybe 15. 5, you're pushing it. 5, you're going to find the most profitable, but the hardest, because you've got a lot of chop within price action. So, but again, at the end of the day, it's the same thing, isn't it? Yeah. Looking at the price action on this chart here, we got a candlestick, which is indecision, followed by a failure for the bulls to go long and a whacking great bear candle. Short it. Now, depending on where your TP was, and again, this is why I say with price action, you do not need to have a positive risk reward ratio. And some of the best price action traders get in and get out. They get out because price action tells them to get out. They don't get out because they've got a 3R. They get out when the price tells them it's wrong. Yeah. In this particular case, the price is telling you there's an outside bar there, which is massively bullish, that there's a possibility that the short you just took here ain't going to work. So when you get there, you like go, okay, well, if we get back to my entry, I'm going to get out. Right decision. But you could have got out down here. If your stop was here or here, you probably got a 1-to-1. Doesn't matter, does it? Your job is to make money. And reading price action is a good way to obviously make money, but very, 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 very time consuming and very, very hard on you as a human being. Yeah. I used to do this a lot in stocks. I used to stock trade NASDAQ price action all the time and indices. The reason I jacked it in was because I just couldn't do it. I'm good at reading price action. I'm not always right. No one's right with price action all the time because, as I say, every candlestick is a different story. You read the story from last time. This is a different one. But focusing on this for 3 hours is a massive mental strain on your eyes and on your head and your focus, your concentration. You're reading price action, you're in the zone, the phone rings, you go off for 10 minutes, you come back, you look at the price action, you go, damn, I missed that. Let's look at the next one. You've got to be almost headphones on, sitting down, and you walk into professional prop firms like SMB Capital in New York, They've all got headphones in. No one talks to anybody on trading desks. Yeah, in banks. They've all got headphones. Get tapped on the shoulders like, sorry, can't talk. Right in the middle of a trade. Yeah, it's incredibly intensive focus-wise. So, but practice it. Try to read it. And this will really help you in exiting your trades with position trading specifically. So you set yourself targets when you position trade. There you go. So there's that price action's now closed on that US dollar CAD. It's told me a confirmation of this candlestick here, which looked bearish, is bearish. So it's confirmed that as a bearish candlestick. We've got a lower low gone in. We've got an indecision candle, and we've definitely got rejection from the bulls. Right, but it's an indecision candle in the fact that it's an outside bar. It's a double top rejection, but as close as to an outside bar, and there's bulls here. So I would say if we break this low on this candle and we put in a lower high, that for me is good enough confirmation. Price action, it is not one, it is multiple candlesticks, 2 as a minimum. But we're going to look at candlestick pattern recognition tomorrow, and how the more candles you have, the more confirmation you have, and the more likelihood of that probability playing out. Yeah, so we'll cover that tomorrow. Let's practice. I've done that one. It's always better to wait until the candle close. Yeah. So again, you can listen to different people, and it's personal. You try it. Yeah. See how you get on with trying to get in before the candle closes, and see how you get on with waiting for the candle to close. You're better off with price action specifically, I think, in waiting for confirmation, because a candlestick can change very, very quickly. Yeah. So at the moment, the bulls are in control. And if you look at this candlestick and in 20 minutes time, it's like this. Yeah. I mean, you still wouldn't make a decision on it, would you? Because it's an inside bar. It's not actually telling you anything yet. It's telling you that for the last half an hour, 20 minutes, whatever it is, that there's been more buying. But it doesn't tell you anything in relation to this candlestick. It means that this candlestick, which was potentially bearish, but we're not 100% sure yet because it ended bull, is still potentially bullish. It's not bearish. If this closes red, i.e. the wick is like that, and it closes like that, it's telling me that the bears won that round. The bulls won that round. The bears won that round. But what would it tell me if the candlestick looked like that? Yeah, nothing. Because it's indecision. Hasn't broken the high of the last candle. Hasn't broken the low of the last candle. Yes, the bears won this round, but the bulls won the last one. So what is it? 1-1. Indecision. You could use that as a scorecard if you want to. When you're trading, look at the price action. Read every candle. That is bearish. So put the bears and the bulls. Yeah, that's bearish. 1 up to the bears. But is it bearish? No. It's also bullish. Why? Because you've got a higher high and a higher low. It's bullish. 1-1. What do I do with that information? Nothing. What's the next candlestick? Bullish and bearish, because we've got a kind of outside bar set up. So I would say the bulls had a go and they closed higher, so we'll give them a point. But the bears made a lower low and the bulls didn't make a higher high. So the bears are in control. 1-1. Do nothing. What's happening now? At the moment, it's a live candle. But when this one closes, if it closes here as the high and the low closes down there and the candlesticks looks like that, it's bearish. What's the score? 3-2. Short. You can use that if you want as your mechanism for trading price action. Yeah. Have a scorecard. There's only 2 outcomes. It's either bullish, it's bearish, or it's indecision. If it's indecision, you give both of them a mark, or you give neither of them a mark. If it's bullish, you give him a mark, and if it's bearish, you give him a mark. But you've got to wait. It's like penalties in football. He takes one, he takes one, he takes one, he takes one. If you get to 5-all and he takes one, he's 6-5 up, but you've got to give him a go at getting at it as well. And if he doesn't score, he wins. You take a trade. You have to have an equilibrium that is broken, and one of the parties takes control for you to make a trading decision. Yeah. There we go. Question, thoughts on a theory that there are lots of orders sitting at the wicks. So in order to continue the move, they need to test them first. Does this make sense? Yeah. So a lot of traders, and this is a method that David Paul, who's passed away now, but David Paul used to trade, which is basically one of David's main sort of theories, if you like, was that you and most successful traders, to be fair, do this, me included. Don't do what everyone else is doing. It's very simple. If everybody else is doing something, do the opposite, because it's more likely that that is what's going to happen. Yeah. So when you get this a push above this wick here, they're testing to see if the bulls that failed last time can do it again. Sell it there, because last time it didn't work. So go on the theory that what you've just seen is the case. It's a little bit like the law, innocent till proven guilty. Okay, so you look bearish. All right, if we get back up there, I'm going to assume you're right until you prove me you're wrong. And if you prove me you're wrong, I won't do it. So that's what a wick test kind of is. Selling above the previous candle's high and buying below the previous candle's low. Yeah. If you look at a candlestick chart and count how many times you see this price action, you'll be amazed how many candles actually don't get very far. You get a lot of movement, but the actual progress is limited. So doing that, just literally buying lows and selling highs, which is what you hear said all the time, isn't it? Sell the highs, buy the lows. It's really simple trading. It is. Because when you get to a level that failed, it was because there was selling pressure. When you get to that level again, there's likely to still be that selling pressure unless something has changed. More buyers have entered the market, which overwhelms that selling pressure. The stop placement on that type of strategy is very difficult because you're in new territory. You're out in highs here and you're like, right, okay, well, I'll sell it. Where'd you get out? That's the difficulty. And that's discretionary. It's a lot of price action trading is discretionary, which is why it's virtually impossible to automate it. So when I see a pattern forming like this, I'm a seller. But there are a million ways that that could form. It formed there with that making higher high and that also making a bull candle and making a higher low. So it's a bull candle with upward wick rejection, which is higher than the previous one. I can write a rule for that. But how far beyond that do you say it's not really where I want it to be? And if it is all the way up there, I want this candle to be bearish. But then I'll see another opportunity where it's bullish and not bearish and it still works. It's a really discretionary thing. And it's not something you can automate very easily. On higher time frames, you can automate it more easily. On lower time frames, you'll find because of the amount of action that you see, you will start to suddenly have this sort of muscle memory built into your retinas where you'll suddenly go, that's going to go down in it. You'll hear me say in the live room every now and again, won't you? I'll look at a chart and I'll be like, that looks bearish. It feels heavy. And it's not anything specific that makes me say that. It just feels heavy. And it's sort of like an intuition you build over time because you see the same thing repeating itself. Prime example on the DAX today of choppy price action, as we call it. Yeah. No information of any use on the 5-minute time frame at all there. I'm loath to change that in case I screw the chart up and screw the EA up. So I'm just going to which is the hourly? Hang on. I've already changed the time frame up here. There we go, hourly. So there's little information on here that helps us on the 5-minute time frame. If you find yourself struggling on that time frame, jump up and see if it's clearer. Yeah. So we got a higher high and a higher low. Yeah. So we've got two candles there showing us it's going up. So I wait and see if we get confirmation. No, now we got no confirmation that the bulls are in control. So we got a lower high and a lower low. Let's see if we get any confirmation that the bears are in control. No. Now we got a higher high and a higher low. The bulls are in control. So let's see if we get any confirmation whether or not the bulls are in control. We got a higher high and a lower low, which means an outside bar, and it's bearish. So the bulls are slightly in control, but I was waiting for the bulls. The bears are slightly in control, but I was waiting for the bulls to be in control. What's happened next? We got a lower high and a lower low. So the bears have taken control with a massive bullish move. Not sure. Indecision. I'm not. If you look at a candlestick pattern of 2 candles and you go, I'm not sure, don't trade. If you're not sure, it means that it's not clear. Price action is clear. Yeah, that is a clearly bullish candle until it's proved that it's not. That is clearly an indecision candle until it's proved it's not. Yeah, but there's no real clear, and you'll hear people say when you're watching people trade live, they'll sit there on a move, and I've seen this and I've done this. You see a break and you're like, that is a very clean break. It pushes up and then it slams down and you're like, this is bearish. Okay, and you see them waiting to try and get in, but the price action doesn't confirm an entry, and you miss a move down to ADR, which happens in 30 minutes, and you just can't find a way to get in because you're reading price action that isn't giving you a signal to say this is going to continue, because every signal is telling you the opposite. What you want is a massive bear move followed by a little bit of a bull move followed by an indecision. I can use that. If that's right, that's telling me that that's happening next. But if it does that, if it does this, little bull move, massive bear move, little bull move, massive bear move, there's just no way of entering. You've missed the move. You can't do anything with it. And this is why people trading the 5-minute time frame will also get crossed, because you'll miss all these moves and it drives you mental. You're like, oh, if only I'd have pressed the button when I thought it might possibly on the cards, but it wasn't confirmed, so I didn't. You did your job right. It's better to sit on your hands and watch a day go by and lose no money. That's a good day because you haven't lost. And that's what it's all about, minimizing risk, minimizing losses. That makes you profitable automatically because the winning trades just look after themselves. So we've got now a bull followed by a bull on the 15-minute. Yeah, but we've also got massive wick rejection over multiple prices. Yeah. So, you know, it is a very discretionary thing. Price action. Also, if we look at the 1 hour candle, it'll be telling us a different story. There were not enough buyers to overtake the sellers. That was on the Euro US dollar, wasn't it? So this is what you're looking at. I mean, you've got a higher high there. So we've got a bull breakout. Yeah. So we've got an outside bar. Okay. So we had this candle here, and then we've got an outside bar. So the bears tried to win, the bulls tried to win, but the bulls clearly won that round. Yeah. So if you're doing your scorecard here, for example, right, that's an indecision candle. So I've kind of got to give the bears one for making a lower low, and I've got to give the bulls one for making a higher low, a higher high. But I'm also going to give the bulls a 0.5 because they broke. So it's 1.5. Discretion. Do you want to take it? It's not right. It's not wrong. It's indecision, but bullish indecision. So see what I mean? It's always going to be a woolly element to it. The next candle here has closed as a higher low and a higher high. Again, it's bullish. And we've got a long wick, which is really bullish. So right now, I would be saying this today, right now, is a buy. It's bullish, yeah? And this is where the next piece of complication comes in. And there is always going to be, and this is why people find trading so difficult, there is always going to be an argument from the other side. So right now I'm looking at this, and I've got an outside bar followed by an outside bar, which is expansion in price. But the expansion is bullish, which tells me, yes, it's good. We should be looking to go long. We've just had a long wick formed, which tells me that the bulls are in control. I want to get in. I would take a break of that high. Yeah. Or as this is closed down or pushing down 20 minutes into the candle, I would say if I want to get aggressive, I might take a break of that high. But if we hit that high and we close down, I might want to exit the trade with a small loss. I don't know. But what is against us at the moment? That. We are trying to long into a massive sell order from Friday. We know the market is short. Yeah. The market has not managed to make any progress. It tried to make progress on yesterday, failed. We are trying to make progress today. But if this is a large order that the banks have not completed yet, what are they going to do? Continuously add. So you're going to find that the price action is probably going to be very difficult to get. You're not going to get that. Put it that way. But if that order is it, why did it not go like that yesterday? Because there's more orders come in. So it's holding us down. So if you're getting bullish signals, you may say to yourself, because of that, I'm only going to look for a bear setup in price action. So if we get now an inside bar, yeah, which is a lower low and a higher, a lower high and a higher low, and then on the next candlestick, we get a lower high and a lower low, that is a bear candle after an indecision candle, but we're still inside this indecision area in price. Until we break and hold and close outside of here, this is in control of the market. Yeah. So, you know, there's so many intricacies in it, and there's so many ways to read it. Reading price action is like reading a book. Yeah. You can read a book and then go to somebody, didn't you love the way that he said this in the book, and that character was this, that, and the other person will look at you and go, that's not how I read it. I thought he was a nasty person in the book because of what he did to his wife. Well, I thought he was a nice person because his wife was nasty. Both read the same book, both read it exactly the same way, got a completely different outcome from reading it. You can read this price action in two ways, and at the end of the day, like we said, we've got a binary outcome. But the clues will lead you. Think of price action like a red herring. The clues are either going to lead you to the result, or the clues are going to lead you to a red herring. The red herring is formed because the next candlestick has a different outcome based on volume. That we cannot control. It's a lagging indicator. Yeah. But yeah, there's not enough buyers to overtake the sellers, but there is kind of. Yeah. Can we have a nosy at the prop strat? Can we have a nosy that the prop strat? Harold, what's that? Oh, the propulsion cap strategy. Yeah, we'll do that in a sec. That brings me to this question. Is there a way to do limit orders on the position trader EA? No. No. I do not. I don't think you should use limit orders. The reason limit orders I think are bad are wherever you put them, right? Let's say, for example, you think price is going to hit this propulsion gap and then it's going to short. If you place a limit order here, okay, and price pushes up like this, and then we get a news event that blows through to 150 ADR, you just got into a trade there for absolutely no reason. And you've just taken 3/4 of an ADR of drawdown on a position for absolutely no reason. What you should do is wait for the sellers who you want, because you're short, to enter the market and go with the momentum that they provide, because they are helping you to make money. These guys are not helping you to make money. So you are predicting a 50-50 coin flip with a limit order. Yeah. With the position trader, EA, what I am looking for is for the people that are going to help me make money to be on my side before I get in, which is why we have stop orders. So if I want to go long, I will go long when the buyers enter the market. If I want to go short, I will go short when the sellers enter the market, because they are the ones that are driving the price in the way that I want them to go. Yeah. I have been so smashed on a limit order being hit by news or just basically pushed through. The other thing you've got to remember is whenever you place a limit order, it's always at a high or a low. Yeah. If the people defending this area lose, they flip long. The next time it comes back to there, they will help it on its way because they've changed their direction. So you enter an order here that doesn't work out. Not only are you entering too soon, you're also 90% of the time going to go into drawdown on that for a period of time. So they're not good to use. If you're using a stop loss based strategy and your theory works out on it, yeah. But this is not a position. This is a position trading EA. It's not a stop loss predicting, hoping price EA. You can have that. Price action toolkit, you can do that with. Price action toolkit has lots of buttons, and it's got limit order buttons. But this isn't for position trading. This is for scalping. And scalping is not on a time frame. Scalping is taking small amounts of money when you're right. It's not 5 minute. People assume scalping is 5 minute strategy, 1 minute strategy. You can scalp a 4-hour chart. Look at the Aussie New Zealand trade I did yesterday. Yeah, I took this trade on the 4-hour chart. Because it was hitting this monthly support and last week's high, and the price action was telling me, yeah, this is all this stuff we've been covering today. And the stuff we're going to cover the rest of this week. It's all about, that's why this trade was taken. It was also an RSI extension, so it's part of the strategy anyway. But that trade was taken up there. But I could have got out there in profit. I could have got in, put a stop loss there, and got out there in profit. That's a scalp. It's a 4-hour scalp. It's taking small movements in price action. It's not trading lower time frames. Yeah, you can scalp daily charts. Come to the daily chart, right? Let me do it on this one so that it's clear. Let me open another chart that's clear on the daily, right? So you can trade, you can scalp a daily time frame, yeah? So today, missed it. Take a long. What did we say yesterday? So when it breaks the low of yesterday, right, and fails, we go long, yeah? I'll get out here with a stop loss there, yeah? I'm trading the daily chart, and I'm waiting for price action to confirm that the sellers could not take control. Yeah, because they couldn't take control yesterday, really, could they? Because, look, we made a higher high and a higher low. So it's bullish yesterday. Bearish day. It closed bearish, but the price action was bullish. So if it comes down below there today, I'll wait for them to not be able to get any further to the downside because the bulls are in control, and I'll buy it. And I'll get out here. That's a scalp. That trade could take 10 minutes. It could take 6 hours. It could take 12 hours. But I'm getting in and out on a small amount of movement within candlesticks. I'm not trading the 5-minute time frame. I'm scalping. I'm in and out quick. And quick in the relation to a day is in a number of hours. Quick in the relation to a 5-minute chart is within less than an hour. Quick on a 1-hour chart, on a 1-minute chart, could be minutes. Scalping gives you more opportunity on low time frames, but the price action is more random. So scalping the hourly time frame is a great thing to do. Today, for example, and this is what people do with the Asian, you've all heard of the London breakout strategy, right? Go and learn the London breakout strategy and do it in reverse. Wait for a London breakout and then don't sell it, buy it. Look at the London breakout today. Beautiful. Buy, sell. 100% strike rate. What are the London breakout traders today done? Gone long, stopped out. Gone short, stopped out. It's scalping, but it's using the hourly time frame to scalp. I'm not looking for, and some of these trades can be the big winners, can't they? But the more greedy you get, the more likely it's going to come back and just go a break even. But it's all price action. It's all based on price action. There we go. Right, so Harold, your strategy. Okay, so what I've done is I've used an indicator import method to get a want the chart to be maximized so that we can see it. So I've used basically the propulsion gap indicator part of the support resistance propulsion indicator and imported that in. Recoding it for the EA is going to take forever. So I've basically just imported the indicator. So I can only test it because I've got the indicator in here. So basically what it does is the propulsion gap indicator strategy is it does exactly what you sent me. Where's the settings? Down here somewhere. Yeah. So I've got settings basically for propulsion candle input and target percent of risk. Okay. So when we get a propulsion, so Harold's strategy, for those that don't know, which is obviously everybody because he sent it to me direct, is very simple. When you get a propulsion gap, the propulsion gap has to be a minimum of, it has to be bigger than the last 25 candles. So the propulsion gap indicator input here, this that I have set to 0, propulsion candle strength, that has to be 25. What that does is it looks at, when you get a large move, if that candle is bigger in size than the previous 25 candles worth of size, so it checks every candle, and if it's bigger than all of the candles before it, none of them were as big as that one, it goes, we're in. That's a propulsion gap. Yeah. So that setting is set to 25, right? And the strategy is very simple. Let me find a decent propulsion gap. There we go. So when you get one, basically, obviously it's a 3-bar pattern. So you have to have a candle, a big candle, and another candle. The lower that candle has to be above the high of that candle. Yeah, that's the 3-bar pattern. And that gives you the propulsion gap. So when this candle closes, that is when the propulsion gap is drawn. That is where you go long. And you basically place a stop at the lower of the propulsion gap and you target 1.5 R. Yep. So that is basically what you will do with it. So that's the strategy, and that's the defaults that I have got it set up at the moment, right? So I'm going to run this just on the hourly time frame. We'll do it on every tick so you can see it in action, and we'll look at some trade examples. So we'll wait for one to happen. There we go. Easy. So there was your propulsion gap formed there by that candle high. That candle's low is there. So that's candle 1, candle 2, candle 3. There's a propulsion gap. So we went long at the close of that candle, which was bearish there. We put our stop there. We very nearly hit the stop, but we didn't. And we put our target 1.5 R, so 150% of what the stop is. Tick. Profit. Ting. We made money, right? That's the strategy. Very, 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 very simple. So that is literally all it does. So we had another propulsion gap formed there. That one was tiny. Now, the problem with your strategy, Harold, and it's not a problem, but it is a potential Achilles heel. Look at the size of that propulsion gap. It's literally a line, but that is a propulsion candle because this is bigger than the previous 25 candles. It is right because it's a propulsion candle with the largest move in the last 25, in this case, hours. So this candle is the biggest movement we've had in 25 hours. And the guys that followed through, the price action following that candle was bearish, and it didn't even get back to the previous low. So this was a big, strong sell candle filled full of lots of sellers. But that is the differential between buyers and sellers. This is what propulsion gap is. It's the differential between the previous lot of buyers and sellers. Yeah. So in this case, that one worked. Yeah. And your stop loss was basically the high of that candle. But that might be the Achilles heel in it. So that might be a variable that can be changed. We'd have to wait and see. So I'll let it play on and do some more trades. There we go. There was one there. Yeah, so propulsion gap formed. Close of that candle, we enter after that candle is closed, because that's the candle that forms the propulsion gap. We put our stop loss there, and we target 1.5 R, zoom straight down, target hit. Yeah, looks great, doesn't it? Yeah, so far we're 3 for 3, right? And so on and so forth. So I'll let this play out a little bit. Okay, watch the P&L up here. So this is an hourly time frame, right? So this is obviously just using less choppy price action. Harold, you've been trading this on the hourly, haven't you? On the 1 minute chart, I think you said. So the problem with testing, this is testing from 2021 to 2024 at tick level. Judging by the way that this bar at the bottom is moving, this test is probably going to take somewhere in the region of 3 to 5 hours. If you want to test this on the 1 minute time frame over 4 years, I can tell you, you will be dead by the time you've finished the test. It's virtually impossible to test 1 minute strategies with any degree of accuracy. And the chances of 1 minute strategies working in the future, put it this way, 17 years, never found one. Don't know any professional trader that trades it either. Scalpers, scalping price action on pure price action and discretion alone, yes, there's loads of them. But mechanical strategies in the 1 minute time frame, you cannot robustness test. So while it will give you a load of opportunities, anything you do on the 1 minute time frame, you really need to stop trading when you make money. One of the keys to prop is not over trading. Yeah, if you take 10 trades in a day with a 1-to-1 risk reward ratio and you win 6, so let's say you have a winner, a loser, a winner, a loser, a winner, a winner, stop. Use $1,000 risk. You just made $1,000, yeah, with a 50-50 strike rate strategy that uses a 1-to-1 risk reward ratio. Yeah, trade that until your heart's content on the 1 minute time frame, because you literally are flipping a coin. But add price action reading into the equation, and you can give yourself a little bit more of an edge. You might get a 60-40, in which case then that's where you become profitable. That's how it works, yeah. But look at what's happening in Chop. Look, Harold. Yeah, look at our P&L. We stagnate. So it's the sort of strategy that relies on propulsion moves being part of, I would say, news, which is where I said that little line you got was a propulsion candle. However, that's a news event. That is a news event. Yeah, these are the ones I think are more beneficial. So one of the things I think it would be good to test with this is also implementing a minimum size to the propulsion gap itself. But that's a hell of a lot of coding, and this indicator does not give that reading. So it's not a 5 minute job, unfortunately, to code it. But look at this, and let me just turn this off of visual for a minute and just put it onto normal testing mode to just watch the equity curve, basically. And let me just move that over. Just so you can see the equity curve run. So this is 2021. This is just the pound US dollar. I always use the pound US dollar for initial testing because you've got high liquidity, usually tight spreads, which is handy. And it's the two main, euro US dollar or pound US dollar. You know, it's the most liquid thing on the planet. So you're always going to get very good movement. You're going to get good strong trends. You're going to get good ranges. You're going to get lots of contraction. You're going to get ADR expansions and contractions. Pound US dollar is a really good test bed instrument to try and prove strategy on. So I always test it on that first. But this is where you're going to get the problems. Yeah, because it uses 1.5 R, you are going to, and every strategy on the planet is going to, run into a period of 10 to 20 losing trades. Yeah, because using 1.5 R, the strike rate's not high enough to sustain a nice equity curve, if you like. But there's probably things we can do to try and smooth this equity curve out. Exit strategies, yeah. So it needs testing, I think, with different exit strategies. Trailing stop exit strategy. That will smooth the equity curve because your losses will be reduced. As long as those winners work, the propulsion moves continue still work. If we can reduce that loss by using a trailing stop, what's going to happen is these jagged downs are going to be more small jagged downs, and it's going to smooth the equity curve out. So trailing stops, I think, is a good one to try. Unfortunately, my EA uses trading stops based on ADR or ATR. So I can't use a trading stop based on the distance. I'm going to have to figure out an ATR method to do that. So again, the EA is not really suited for this. But, you know, what I'm trying not to do is give myself 3 days worth of coding work to disprove a strategy because it's just a waste of time. But it has got an edge, look. Yeah, so test is still running. We are halfway through a 3-year test-ish. And we got an edge, but, you know, you've got periods where it's just not going to work. And these will be probably no news days where you get a move that just fit, you know, they just peter out. Rangy choppy price action. Wow, that's a massive risk, whatever that is. There's a whacking great lot size there. 16 lots. So the risk on that one would have been a tiny candlestick with a propulsion gap. You would have got in and the stop would have been literally pips away. So it took 16 lots. Again, outlier. We can eliminate outliers. That one happened to win. So it's an outlier we need to remove. Unfortunately, it was a profitable outlier. But anyway. So, you know, you're still up, but not the best equity curve in the world. Again, I'm just testing one time frame. So... but it's definitely got a profitable edge. Let me just stop this and show you the edge. So the strike rate is 42.2%. The reward is 1.5R. So that strike rate is enough to support an edge. Yeah. So let me just quickly stick a trailing stop on this and see if we can get it to smooth the equity curve. So we use, I've got to use ATR. Yeah, because propulsion gaps can happen above moving average. So we got to use an ATR trailer. So we probably need to use ATR based on the current time frame. And we want to include the propulsion move. So probably ATR 10 on the current time frame. So it's a case of testing the trailers, really. So if we just use a 2 ATR trailing stop on the current time frame to start with and see what impact that has on the equity curve, and hopefully it will smooth out those big jaggedy losses. There we go. So that is a trailing stop. That is a trailing stop. Yeah. So the equity curve is, these losses are smaller, look. Yeah, we've got lots of little losses going in here, but they're not that size, they're that size. Yeah, so we've smoothed out the jaggedy using a trailing stop. So trailing stop exit is great. That you couldn't do anything with. So this is basically getting into a propulsion gap trade and it just going, getting into a propulsion gap trade. So it's that. You cannot get rid of that. It happens. It's the market. It will go into range and it will stay in range and every big move will be undone because it's just what we discussed yesterday. It's balance. When the market finds balance, it just does that. If you've got 100 million long and 100 million short and everybody's happy to do the price transactions at this level, it will do that and it will stay doing that and you cannot get rid of it. So you've just got to try and minimize the losses during those periods. Trailing stops will still lose all of those trades. But if it pushes in your favor for any percentage, it will reduce your losses, which smooths the equity curve out. So we're already making more money than we did by using a fixed stop. We're nearly halfway through the test. Yeah. So it's got potential. So I think we need to, it's something we can play with anyway. It'd be good to do permutation testing on the prop gap strength, stop loss, and risk reward. Yep, that can all be done very easily. Stop loss, I can't vary the stop loss. You've got a fixed stop loss. The stop needs to be at the bottom of the propulsion gap. The whole edge of your strategy here is that move is going to continue. Therefore, if that goes below that level, it's invalid. Yeah. If you don't have a reason, mechanical reason for it, i.e. bulls, banks have got more money long than short, therefore they will defend this zone. That's the reason for a propulsion gap. That's the reason for your trade theory. If you do not use a stop loss below that propulsion gap, i.e. you decide to go down there, you might as well just use an ADR based stop, in which case you're just flipping a coin and this price action isn't why you're getting in. Yeah, you've got to have a trade invalidation with a stop loss based strategy. That doesn't work. Use 1 minute to show an example. The plan is to test on every time frame. Yeah, the idea behind this is to use this on prop firms. Yeah, so if you're using on prop, yeah. Ooh. The thing is, though, I don't know if you can see that down there, but we're still in profit. Now we're not. Just as I said that. So it's just dipped down below our starting balance, which is 100k in this case. So we're still trading down at 100k. We haven't lost any money. We haven't won anything. Yeah, so if you're using it on prop, that week is a pass. That week is a fail. That week is a pass. That week is a fail. Pass. Not doing anything before you failed. Pass. Fail. Pass. Fail. Pass. Fail. This is why stop loss based strategies in prop are very, very hard. Well, prop is very hard. Yeah, we've covered this, haven't we, when we covered the prop session. Yeah, it's not about whether you are a good trader or have a good strategy. It's about when you start trading, are you hitting a winning run or a losing run? Yeah. If you started trading prop here, by this point here, you're going all over YouTube and everywhere going, hey guys, I've found the perfect strategy, da 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 da, and you start trading it and you're like, it did work. And then you're like, oh, where's he gone? This is how gurus are invented. It is, honestly. This is how gurus become gurus. And why they disappear. Because they don't do this. They don't see what the long-term outcome is going to be. Makes money, though, which I'm happy. Yeah, needs some smoothing. This is going through COVID. No, this is post-COVID. We're trading after COVID. We're not getting involved in COVID at all. My testing is starting in 2020 from May onwards. This is actually starting 2021. Was also wanting to use this on the NAS and only trade between a set time. Yep, that can be tried as well. Yeah, it broke support, unfortunately. But look at the P&L, right? The test is finished. We made $15.54. It's a profitable strategy. Strike rate is 42%. But the profitable trade is 111. Losing trade is 81. So it's got an edge. It's got an edge. It's just the equity curve doesn't work. So this is what testing is all about. And this is kind of why I wanted to do these types of sessions. Is, you know, this as a strategy has an edge. How do we get rid of this? So it's about looking into why this has happened. Why did this suddenly go wrong? Yeah. So, you know, opening up the chart on the pound US dollar and looking at where we started to decline, which was October 2022. So if we go out, I need to hang on. Let me just find October 2022. So it's back here. It all started to go wrong here. So, right. Anybody know what that is? It's not COVID. And this is probably why the market suddenly stopped working. Yeah. So nobody knows. That's Liz Truss crashing the pound because she decided she was going to completely change the monetary policy, which doesn't work with any other country in the world. And this is Bailey in the Bank of England saying, sack her immediately, I'll bail you out, but you owe us a load of money. We went into contraction after that. So if we stick an ADR on this chart, yeah, look at this market condition. And this is what I mean about testing different market regime. This works really well when the market is trending and when we have low average true range in the day. So if we've got a low daily ADR, when we get these moves, there is a much bigger reason for those moves to have happened. Therefore, the continuation of those moves is more probable. When you have a lower, bigger sort of ATR, it will struggle. So in this case, I would say it's probably that is the market regime that we worked in, and this is the market regime that we didn't work in. But then again, everything's been different since 2022 because we changed interest rates as well. This is when all the interest rate rallies were really kicking off. So it just doesn't work in that period of time. So we need to find a way to get in and out of this strategy that works from that perspective. So it may be that the trailing stops need to be wider, or we need to use a different R ratio on it. And so one thing we can try, let's quickly try it now actually, because it's not a bad test to try, is going with a 1-to-1 risk reward ratio. So we won't use a trailing stop, we use a 1-to-1 R, and see if we can get a strike rate above 50%, but on a consistent basis. So maybe that even in market conditions where the regime has changed, it may be that these give us an edge at 1-to-1. Try that. See if that works. Obviously, you're going to get a much choppier, and you're going to get those big losing runs still. But if the edge is that 60% of the time propulsion gaps work, we're going to make money. You're just, again, for prop, it ain't going to make money, is it? Long term. But short term, it's going to get accounts passed. It's going to get you enough to make $5 a go. Pull it out, job done. So let's see what happens when we get to October 2022 this time, which is, I wish they put a date on the bottom, February, April. So stagnation, new high made there, and then we made another new high, bit of stagnation, another new high, new high. So this is risking $100 a trade, right? Fixed. We're up $4 so far. So where are we? Date wise, September. Okay, so this is coming into October. So this is Liz Truss. So Liz Truss has announced that in the UK, we're going to decide to do everything completely different. And Kwasi Kwarteng going, this is the best idea since sliced bread. And everybody else on the planet, apart from those two, turning around and going, are you nuts? And basically removing the pound from their portfolios and making us bankrupt, and then Bailey coming in and helping us out. So remember the last equity curve? We just basically returned to origin. So still struggling, but it's not dropping, is it? So targeting, so this says to me, propulsion gap theory should be a scalping strategy. Yeah, we shouldn't be looking for it to move a certain distance. But I think one of the things which would be the best control on this is size of propulsion move compared to ADR. So tiny little ones and absolutely massive ones, which is the best? Yeah. So some are going to be fundamental news events. Some are just going to be a big day. We're not going to know which. But look at that. So that equity curve is smooth now. So what we've done is we've discovered a strategy that works with a 1R in certain market conditions. When the market conditions are wrong, it does not lose money. That's an edge. It's a good edge. Yeah. But are you happy from 2022 until today to take a slight loss lower than the one you made 2 years ago, i.e. not make any money this year, can't pay the mortgage? So it's not a strategy that you can make consistent profit from on a regular basis to rely on as an income, but it is a strategy you could employ them to prop and get these runs which make you a really good amount of money. So from that point there to that point there, made loads of money in prop. From that point there to that point there, you blew 1 or 2 accounts. And in fact, to be honest, from that point onwards, you'd have struggled. 2023, October until September this year. So about the last year hasn't worked. Oh, sorry, that wasn't ADR. That was a 4-hour chart. I had that totally on the wrong time frame. Idiot. Why did nobody tell me that? So yeah, so there's Liz Truss. So the ADR difference actually is not a lot different, is it? It is lower. We've had lower ADRs in the last year, but look at the price action though. Look at the price action we were making money in. Works in trending markets. Look at the price action we've had this year. Contracting range-bound markets. So this strategy is a very good strategy for trending markets. So with that in mind, let's apply it to the US dollar yen, which is the trendiest thing on the planet. And also stock indices. Yeah. And again, we're just looking at hourly time frame here. This might be the wrong time frame. Yeah, it might be absolutely terrible as a time frame. So gone into a bit of drawdown, start off with. And again, looking at the US dollar yen, be interesting to see how it handles the intervention in 2022 and the second intervention, and then obviously our most recent one. Yeah, prop. Holy cow! I've not only passed second evaluation, I've also got 10 grand out of my funded account. I've started another account. I've passed that evaluation. I've now got 2 funded accounts, and I'm drawn out 25k. Oh crap! Really good for prop, isn't it? Because you get these beautiful winning runs where it suddenly just makes money. Great strategy, but it's struggling to be consistent. So there's the problem with this is there's a lot of variables in this strategy as well. So we kind of need to test a lot of different things, don't we? So it's something I'll work on maybe building out into the EA more variables that we can test. It needs more variables. Depending on the time frame it's done on, obviously, you could make it an intraday strategy as well. So you could have end of day exit. So finding 5-minute time frame exits, entries and exits same day on propulsion moves on the 5-minute time frame. So, you know, this is the thing. When you do this sort of test and you find these equity curves that don't lose money, and this is the thing, you know, if you find a strategy that doesn't do that, you've got something that has got potential. It's just finding out how to smooth this out. How do we get rid of that? Because if we can get rid of that, this stagnation and this run up will make it a profitable strategy. We've got to remove the drawdown into the account. So there's a filter we can apply, or some way we can filter this out with trailing, with exits, with all sorts of other criteria to try and get rid of that. It could be that you only trade in line with the trend. So taking propulsion gaps in line with the moving average. Let's try that. So we use an MA filter. So we use a moving average filter on the let's go with the same time frame. above the 50. And we use the angle of the MA, meaning that the market is currently moving in that direction rather than it being above or below. We'll try and apply a moving average filter and see if that filters out some of the mean reversion ones, which would be losses. Because if this strategy works better in trending conditions, we should have a trend filter. And again, this is just a one-to-one risk-reward ratio that I'm testing here. It may not be the best. Maybe that we need a trend filter applied and a positive R. But look at that, trend filter certainly seems to have made a little bit more of an impact on it, but still not quite filtered all that loss and drawdown. But it's got potential. Put it that way. The daily time frame could do well with a trailing. We can test the daily time frame. Yeah. Just want to let that run a little bit and to see if the trend filter helps in any way. But this is the process I tend to go through with strategy testing. Rather than just doing a massive optimization, I want to find if there is something there looking at it. What's it doing? How's it doing it? What possibly could make it better? And then you, rather than testing everything under the sun, which will always give you something profitable, because there will always be a curve you can fit that will make a profit. Every EA, you can change variables to something that will match rightly what you've seen in history. It's not about finding and curve fitting. It's about thinking logically about what is this doing. It's a breakout strategy. So breakouts turn into trends. So what we're trying to catch is something that is potentially moving in the right direction already that is adding to that trend. Therefore, we can get in on it. So a positive R using a trend filter is probably going to work better. And also a trailing stop exit will probably work better. But look how we've improved that equity curve already. Yeah, we're back in profit. Because we've literally just added a moving average filter, which gets rid of all the propulsion gaps that go against price, which are what? Possibly pullbacks. So we're removing all the pullback trades, which are mean reversion entries. We're turning this into a trend breakout strategy, in which case we shouldn't be using a 1R, we should be using a positive R, or actually not using an R at all. So I'm going to try something else here. I'm going to remove the TPs, delete the take profit, and I'm going to implement a trailing stop using ATR. We'll just try it's going to be really tight, a 10 ATR trailing stop. 2 times a 10 ATR trailing stop. I think that's going to be a bit tight, but we'll try it. Because if these breakouts in line with trend are going to work, we'll let them go. And see if we can get those winners. We're looking for trend trading is all about getting the big winners. So the strike rate will be lower, 30%, 35%. But we're going to look for some of those big runners. And we're going to get on those big runners. There we go. Runners. It's a trend breakout strategy. Let your winners run. But, you know, is that ever going to happen again? Were we the right direction when Liz Truss crashed the market? Is she going to do that again in the future? Probably not. First of all, she's not in power. Secondly, we've all learned from what she did. Her government's probably not going to do that again. So do we need to exclude that as an outlier? In fact, I don't even think that is the same time. I don't think that's October. That's March 22. So Liz Truss is coming up. Oh no, this is US dollar yen. Liz Truss isn't even in the equation, is she? There you go. There we go. So we got a decent strategy there. If you set and forget this on prop, at points it's going to give you those whacking great payouts. You know, the payouts where you see so and so and so and just withdraw 50k. This is going to give you those once or twice a year. You just suddenly get it right. But I would imagine most of these you'll probably find will happen over news events. They won't let you trade over news. So again, the strategy cannot work during news. However, because we're getting in after news, and if these propulsion gaps are caused by news, as long as there's not another news event that you have to get out of in between your entry and exit, then it will work. Got to think of all these things because props so restrictive. But that's better, isn't it? Yeah. So it's all about fine tuning. But yeah, trying on higher time frames. Let's see what the strike rate is on this. It's probably going to be lower than 42%. Oh, it's 42% still. Okay. So what we've done is we've maintained the strike rate, but we've increased the risk reward, which has obviously given us more profit. So drawdown is 2k. Profit is 3,200. And again, this is using tiny risk. Yeah. Think about prop. We wouldn't be using 100 risk. We'd be using 1,000. Yeah. Let me just. I don't know if to use a bigger trailer. I'm going to use a 4-hour ATR trailer. So I'm just expanding this trailer a little bit. Do this one in visual mode so we can see the P&L. Yeah, so watch the P&L. So imagine this in prop. 500. 12 grand. Stop right there. Target's 8. Ka-ching. Passed. Passed evaluation. In fact, I went further than evaluation, so you should actually give me more money. But I've passed, right? Passed evaluation. 14. 13. 11. 10. 12. 14. 12. I'm just seeing when I get paid. 11. These are days flying past here, each of these lines. 8, 7, we've drawn down. 5, whoops, we've drawn down. Okay, so we haven't managed to make a withdrawal yet. We haven't blown the account though. 9, 7. We're struggling to make money, aren't we? So we've got to filter some of these losses out. Yeah, we started on 14, account blown. Start again. That account's blown. They're negative now, look. So that didn't work. But there will be a way that we can improve that. So from a prop strategy perspective, I think you're onto something that might actually work in prop. But then again, a coin flip will work in prop. Yeah. So I've got us. Let me just reset this a minute. One trade a day, and I want to use delete and moving average filter, and ATR stop. I think this is the setting I tested. So this is a coin flip strategy basically. What it does is if the moving average is pointed up, it goes long. If it's not, it goes short. And it should be using a trailing stop. There we go. Yeah. So we just, oh, it's 186. So let me just change the risk to what it would be on prop. So this is just to prove that point we were talking about when we did strategy development and what AZ came up with, basically. You can make money on a coin flip. So the trend is long. So I've decided to take a long. Only takes one trade a day, and it gets out on a trailing stop using ADR. It's made 2 grand. Same thing, trend's long. Let's get in. Made a little bit more. This time didn't go away. We pulled down into a little bit, but we're still going long. Yeah. The only reason this is trading is because the moving average angle is pointing upwards. 7 grand. Yeah. This will fail at some point because the moving average angle will change. And it's a trend strategy. And it's basically saying if it's trending, go with the trend. If it's not trending, go with the other. It basically always goes with the trend. It's an always in strategy. So it will, as soon as it exits, it gets in. And it will stay long until it makes a loss. And then it flips short. Yeah. So we were long because the trend was long. And then the trend proves us wrong. So we flip short. And we go short. Yeah. So we're at 8.5 grand. I don't know how long we've been trading. But we're now buying again because we got out of that short and the trend was long. Break even trade there. Didn't make any money. Loss. Yeah. So now we're going long because the trend is long. And this is where this fails. Coin flip strategies work really well in trending markets. In range bound markets, they just hemorrhage cash. There we go. So made a little bit of money on that long. Gone long again because the trend is long. Okay, 8. How long we've been trading? We started on January 21. And we are now July. So 6 months. We've made 8 grand. Literally just by pressing a button because of the angle of a moving average using a trailing stop loss. Getting it. Trend strategies. We can make this more effective by reducing the stops so that we get into more trades. There's lots of ways you can improve it, but this kind of proves that coin flip strategy that AZ sent in the members group. Yeah. So this is basically trading that strategy. It's not using stocks. And the reason this isn't as successful on Forex as it was in stocks is because in stocks you get gaps, and gaps make big profits. You don't get that in FX. And you get a lot more range bound activity in FX than you do in stocks. So there's a nice little trade there. But you see it's up and it stays up. The edges very, because it's a trend based strategy, it's big up spikes followed by lots of grindy downs, big up spikes, lots of grindy downs. Yeah, look at this trade we're in now. Watch this. When it updates. Did that update? I did update, yeah. So look, undoes, like trending, undoes more than 50% of that move with just one trade. It's really good. But anyway, so yeah, we'll work on that, Harold. I think it needs more inputs and more variables to be tested. Unfortunately, I can't give you guys this to test because it relies on you having an indicator that is imported. And for me to reprogram the whole propulsion gap logic into an EA from scratch is a hell of a lot of work. It may look like a very simple thing, but the logic behind it is quite complex. So I will do a little bit more testing on it, and I will do some robustness tests and some optimization tests and see if we can come up with something that works. I will also test indices with it and see if we can get some indexes that work with it as well. And I'd imagine it will work on most stock indices. So there we go. So that's price action covered. EuroCAD's on its way to target. So anybody still in here? I'm assuming there's people still in here. Should I get out of EuroCAD now, or should I still remain in it? I'm long from here. Is there anybody there? If I'm talking to myself and you're watching on replay, answer in the comments. This is the trouble with these streams. I can't tell how many people are on them because it doesn't give me a reading. So I might just be sitting here talking to myself for all I know. But yeah, price action. Is this telling me to exit or not? No one's going to answer, are they? We are here. Someone's here. Jules is here. That's good. So I'm long this. Yeah. Exit? Why, Bill? Why should I exit? purely based on price action on the hourly time frame. Stay. There you go. Discretionary. See? Right. I would say stay. And the reason I would say stay is because we've got a candlestick which was bullish with a higher high and a higher low, followed by indecision, which means shouldn't do anything. So we've got an inside bar. We couldn't make a higher high. We couldn't make a lower low, but it is a bearish engulfing. So it's a bearish indecision, followed by, right now, live with 45 minutes to go, a higher low. And at the moment, we haven't broken that high. So we've got a contraction. So if we drop down onto 5-minute time frame, you'll see a contraction in price. Yeah. So that was that candle. That was our inside bar. And we are currently inside bar on an inside bar. The two inside bar. It's contraction. But it's a contraction, or what people would call a flag. Or a pennant. Probably heard the pennant formation. It's a pennant formation formed on bullish price action, which is a continuation pattern. It's a continuation pattern that will either continue or it won't, but often they will. So price is not telling, it's not telling me to get out at the moment. However, if we put in a lower high and a lower low, my P&L will drop from 550 to 480 or something. I may well take a decision to close that trade. The reason being is I'm only a quarter of an ADR away from my target. And there's absolutely no point in leaving $480 on the table to try and make $600 when I can spend that. And if that doesn't get hit and it comes down to there, I can't spend it. Simple as that. Go up to a higher time frame. Good one. Any reason I should get out of this? Absolutely not. What's price action telling us? Higher high, higher low, higher high, higher low, higher low, sorry, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Any reason we should exit? No. Get down to the 5-minute time frame. Here, you had an outside bar, followed by a lower low and a lower high, followed by a lower low and a lower high. Sorry, a lower high and a lower low. A 5-minute trader will be shot of that. It'll be out. Someone trading 5-minute reversal alerts will be out. You see the difference time frame makes? Yeah. Reverse alert told us to exit. Lower high, retest. Yeah, this is an M pattern reversal on the 5-minute time frame, but it's also higher lows. Contraction. Yeah. Price action is infinite in the possibilities of reading it. And the higher you go, the more smoothed that pennant becomes. You go up to a 30-minute time frame. It's even more smoothed. Yeah. But on the 30-minute time frame, you got a propulsion gap, which held, followed by a higher high and a higher low, followed by a double bottom lower high, indecision, followed by indecision, followed by a higher high and a higher low. When this candle closes on the 30-minute time frame, that's a bullish signal. Yeah, we've got indecision, followed by indecision, followed by bullish. Now you can choose to take that one, or you can choose for a confirmation candle after it. Up to you. But on the hourly time frame, you've literally got a bullish candle followed by an indecision candle. So far, we've got 2 candles and no decision to make. On the 4-hour time frame, we haven't even had to look at it. We haven't even had there's not even any indecision yet, is there? It's bull, bull, bull. Right now, we've got 2 hours, 40 minutes left. If this closes above that high, it's bull. Don't get out. But you see what I mean? If you're trading the 1-minute time frame, you'll have been in and out 1,000 times today. You're going to make much more money and be much more consistent trying to scalp or trade higher time frames, because all of that crap is, everything becomes clear. This is like looking, these time frames are like, you know, looking through like laser specs. These time frames are looking through bottle tops. Yeah, it's just mixed message after mixed message after mixed message, which gets smoother and smoother and smoother. Yeah, indecision because of inside bar. If it's in profit, exit. Danny, you know, again, this is where your discretion comes in. The reason I'm not pressing the button right now is because I've already banked 700 this morning. I'm not in a lot of drawdown. I've got a lot of risk on, but I'm not going to shut that. I'm going to let that try and turn into another 700. And then I will use some of that to do a bit of DD control on this Aussie US, which is causing me problems. I'll probably shut that out or shut 50% of that out using some of this. Yeah. But until this says I'm putting in a lower high and a lower low, there's literally nothing. And again, you could use a moving average. Look at the 5 MA. Yeah. If this doesn't close below that 5 MA, we can't have bearish price action. So you can use a moving average if you want to. That'll confirm your price action for you. But then again, which one do you use? You can use a multitude of MAs and you can curve fit them to whatever you like. But at the end of the day, it's a rule. Price action is discretionary, isn't it? Go to look at the high time frame. Yeah, I can answer that one. All right, so that's about it for today. Again, we've gone on for way longer than anticipated, 2 hours 20. But that's what's going to happen when we're testing strategies and stuff. So I will do a little bit more work on that one today and see if I can get some kind of smoothish equity curve on it that might work. But it's got promise. All right. So any questions on price action, chuck them in the comments in Discord or bring it up tomorrow. Tomorrow and until the end of the week, I'm going to cover in sessions main candlestick patterns for reversals. So we're going to look at multi-bar patterns. Kind of covered it today, so it might be a short session because there's not many of them. Identifying good trading levels and when not to trade. That is also part of price action reading. Identifying limit orders from banks. Targets for exiting price action, very similar, same sort of stuff. But, so those 3 sessions are really kind of intermingled. So if I can cover as much of that as I can in one session, we might get 2 sessions of something else today, this week. But we'll see how it goes. This is all about just doing sessions, and we lead where we lead, and we do what we do. So I'm happy to jump about if you're happy to jump about, basically. All right. Have a good day. Anything you need, let me know. I'll be back tomorrow for normal live streams, and obviously tomorrow morning at 9 o'clock we'll jump in and do whatever we can with the other sessions we've got planned, and I will let you know how I get on with this testing. Any more strategy you've got that you've traded and have some information on, let me know as well. Alexander, I appreciate what you've posted in the members group, but I need, if you've got strategy ideas, really they need to be ones that you've traded, you've tested, and you think have got a good edge. I can go onto YouTube and find 1,000 strategies today, and I have done this all my life. I have thousands of strategies I can build. I want stuff that you think is good, because if people come to me with stuff that they've traded and they think is good, that's great. Let's test it and prove it. Worst case scenario, we disprove it and you stop trading it because you change the way you trade it because you understand the pitfalls in it. But just chucking strategies that are found out there, I've done that. I can do that anytime. So try not to just go, I heard about this guy who reckons he made $1 million. This is the strategy he uses. I've never looked at it. Look at it. Don't make me do all the work because I've got a lot of it to do already. So try and come up with stuff that you think is good. But that Monday, the Tuesday, Wednesday reversal thing for indices is, I think, might have an edge to it. So I might build something out on that because it's really easy, isn't it? Yeah. If Monday is down, buy. If Monday is up, sell. There's obviously going to be 1,000 variations on how you can trade it. We've got exit strategies coming out of our backside, haven't we, with the EA that I can test. So, but yeah, it might have an edge. But it's going to be one that you're going to obviously only going to be trading once a week. Yeah. So maximum trades you're taking 52 a year. So it's not something you can trade and make a lot of money out of. It's something that's going to be for investment. So yeah, that's not going to work, is it? Not going to work for things like prop. What it might do, you get in with $5,000 risk. If you've got a $5,000 drawdown and you give yourself 1.5 ADR of breathing room and you get out on Wednesday, that might be an exit strategy. We'll try it. We'll test it. All right. Have a good day. Anything you need, let me know. Otherwise, I will see you guys tomorrow. Have a good one.